Hello everybody, welcome back to Financial Trading Basics Part 15, Fungibility. Love that word. Best word I've heard in a while. What is fungible? What is tangible? Fungibility is touchable. A non-fungible token is a right to a digital asset. So, a lot of things to talk about in this. I just titled it Fungibility because I like the word. Well, a bunch of different stuff to talk about for economics today, but that's what an NFT is. But more generally, what's the future of the digital economy? What do I think about NFTs? Do I like them, dislike them, and what do I think is going to happen with them? Yes, I think, to me personally, immediately this just strikes me as the most interesting economic development in the foreseeable future. So NFT logically or economically to me is equivalent to an option, right? It's a right. But what's different, right? An option contract, you have a right to buy a share. Well, now a non-fungible token, you have a right to, again, a video clip, some digital art, something. But as we've proven in physics and stuff, right, the future is clearly digital, but the digital economy is not going to go away. Businesses will come and go. The internet, rights to things on the internet absolutely won't go away. So what do I think, not disregarding, the one top shot, I think that's the NBA's one. Again, I'm not even really sure, like the structure of them, how they're exchanged, or like they're on exchanges, or like how they establish the right. I think it's blockchain, but I think NFTs, again, I don't know what the use case will be, but I think this will be, if we come back in 25 years and you say, what's the most exciting, innovative company, I'll bet a lot of money they're doing something with an NFT. Because one, the internet doesn't go away, and two, I know they said this is just so new, I think a lot of cool things will come from them. But like, augmented reality, like VR headsets, I don't think that's like super intriguing as a consumer right now. But if you can find some way to like really bolster that experience, and then you have the rights to like an NBA game or something, and you can somehow like immerse somebody in that experience, and then you have the right to that video clip or that experience. Again, goofy numbers will come out of that. Maybe if you have a math subject and you discovered a bunch of things, you might be able to sell video clips of your lectures for unreasonable amounts of money. But the real economic thing is it doesn't go away. Like an option, it can expire worthless. A company can go out of business. An NFT to me seems to be like a store value. I think NFTs are going to be the biggest store value. Fuck gold, fuck Bitcoin. NFTs in general. This is really cool. I think so. So that's what I think about NFTs. Should you exercise or roll an option? Just talking through, because I've been doing a lot more options trading, a lot more equity and options positions. So I'm just talking through some logic. Should you exercise or roll an option? Remember, an option is the right to buy or sell a given stock at a given price, your strike price. So if I'm in a call option and it appreciates, why would I want to exercise the option, meaning buy the share, as opposed to roll those profits into a future call option, right? Let's assume I expect whatever trade I'm in, I expect it to continue going up. The only thing that matters is the percentage change. So typically you'll get a better percentage return from an options trade. Like you put $1,000 in a given stock and the underlying appreciates 100%. If you were in the equity position, you would return 100%. With an option, you'll probably return a lot more. Like I said, I like to initiate the trades with the equity positions because you own something of the company. So to me, I don't know. There might be some logic or some strategies why you should exercise an option and buy the equity, why you should roll into another option. Not clear to me. But fundamentally, I think the only thing that matters is just the percentage change. So no real clear difference to me. Multi-leg options, again, I've not executed a lot of these. I think I've done one a couple of years ago. But typically that's for hedging. Like if you're, like I said again, in any dollar figure amount that I've said in this series is not like super stringent or anything. But multi-leg options are typically hedging one side versus the other, and I just like to look for trades that I'm more certain are going to go one way, just pile in, a call or a put. I'd rather, frankly, your put options always have a finite profit potential because 0 is 0, but I would rather short as opposed to take a put option, but I would rather have a call option of, I think, for an appreciative position. But I said, I don't know. I would like to get into this more because if you have a smaller account, multi-leg options, like I said, I'm never going for 4 to 5 to 10 to 20%. I'm literally going for hundreds of percent returns. So if you're working with a lot more money, multi-leg options, I'm sure there's probably pretty good strategies. I just have not been exposed to them yet. And I'll be exploiting. So I don't even care. Like I'll be trading to educate as opposed to, well, obviously make money, but like I said, trading's not going to matter to me personally. But how about buying calls versus selling puts, right? Buying calls, both positions appreciate from an increase in the stock price. Selling puts, you're collecting the premium, and you can, hope it goes worthless or hope it just goes up some amount. But selling puts is going to put money into your account immediately. But for strategy strictly on the option position, I don't know if there's a consensus or generally thought about when to do which. But I've never sold puts, nor have I bought call or sold calls. I've never sold puts or calls, so I just don't know the use cases for those. Dividend risk, like if I go open an options trade, it will say, here's your profit, your max loss potential minus dividend risk. How does dividend risk affect an options position? If I have a dividend, I'm a company, I've made enough money, I said I'm going to give my shareholders payouts. So personally, I just don't know. I don't know why does a dividend affect an options profit potential? Again, that should have a very clear answer. I just don't know it. Let me start. Like, it would be clear to me, right, if there was a secondary offering or a tertiary offering of shares, there's more shares, it changes the float, just excess cash flow, why does that affect my profit or loss for buying a given share? Again, I don't know what I'm missing there. Debt instruments and asset correlation. I said I briefly referenced, like I said, I don't trade in bonds, again, just because of the percentage return. But I could be missing something. I mean, there could be some way to play debt instruments very well. Asset correlation we've talked about, I think, is just a very broad concept. Are assets correlated? Yes. But again, there's one sentiment, it can change very fast. Which assets are correlated? There's a lot of different assets. There's asset classes, there's industries, there's Forex to central banks to policy to this company to a different company to innovation, IP. He said there's just a ton of variables, and I'm sure they are correlated, but what are the correlations? Don't know. What are the strongest ones? Don't know. But when you're trading, I think there'll be a lot of correlation for Forex. So I'm maybe taking 3 or 4 spot trades on the dollar versus Canadian or something a couple years ago, but nothing serious in terms of consistent trades. But just a couple terms I hear people talk about on CNBC that I'm not really clear on, like yield, bond, and interest rates. Okay, so again, I can just be missing something, but when someone says yield, a profit is a yield. So yield's a very general term to me. I don't know if they're talking strictly about debt instruments when they say yield, bonds or loans. So like a central bank says, here's $10, now you owe me 1%, or 10%, then you owe me $1, you owe me $11 back. So I'm not, when people say interest rate versus yield, I associate interest rate to bonds. Yields, to me, that's a very general word. It's just not clear to me, or not clear to people on CNBC what that means. But just in general, price to fundamentals. How are the fundamental assets correlated to their price per share? Typical saying, a market can remain irrational longer than it can remain solvent. Let's think about that. We've related rationality to solvency. Solvency to me as a functional definition is the ability to amortize debt. Can I have debt? Yes. Can I have a business if I can't pay off my debt? No. So being insolvent is to me is the incapacity to continue business progressions because of debt. So what does the overall, that's an oversimplification for an economic market to me. Solvency, the ability to pay debt versus rationality, the prices of, going from 15 times their forward earnings to 100 times or something ridiculous. Like, how the fuck are those things related to me on a business? I don't even, what the fuck is that? I don't know. But again, that's just an example. I hear it all the time, and it's like, the variables are just like, whoa, random shit. Is debt bad? Business versus personal. Personal, I won't say always, but starting your professional life, yes, I would say just categorically yes. Business, I won't say never, but a lot more lenient there. Right, if you're obviously like a purchase order, if you're funding a purchase order and you have some either debt interest or just 24-hour, 48-hour loan or whatever, I mean that's obviously not bad. So there's a lot of different times in business I don't think debt's bad at all. But how much is bad globally, nationally, or locally in terms of like stagnating an economy where inflation's going to hit really high, the central banks can start printing stuff? I don't know. I really don't know. Some percentage again. I just don't know. I'll just pose that question and leave it there. But to asset correlations, like I said, my only thesis for asset correlation is people say a lot of things are definitively correlated and they're not, and so they just draw the wrong correlations, or they draw them wrong, or they're too confident about it and it's just weaker than the correlation really is. So I think you should start having to confidence intervals and statistics. Like, what is your percentage of I think the dollar is X amount of percentage correlated to the Fed saying this or Fed saying that, or they could just be wrong. Central banks, Forex pairs, policies. Like I said, I don't trade Forex much, but I think for correlation for trades, like going to make money as opposed to economic policy or theory, I think there would be very good asset correlation for Forex pairs. Product, business, industry plateaus, and the future of Bitcoin. Let me start over again. So what do I think the future of Bitcoin or cryptocurrency? Like I said, I'm sure of Bitcoin, as opposed just because of market share and popularity, as opposed to other cryptos, maybe some use cases. Like I said, it will plateau as a function of the population. So this population, more consumers, more spending money, this is the biggest thing, in my opinion, for the underlying of an economy. Population goes up, market tends to go up, that's why. Sentiment goes up, all of the assets in a given market are going to appreciate similarly. GDP, gross domestic product, either can come from innovation, producing something new, or just limiting inefficiency, and both are going to happen tremendously. So I think, right, the point of business is to make money. So if you decrease inefficiency or if you produce innovation, you're going to increase profitability, which by definition increases GDP, which increases free cash flow of everything, which increases spending of everything. So I think Bitcoin, like I said, a financial standard for Forex or for global currency is a lot different than a given a Microsoft or a FANG or a given company. It's just a different level of innovation or problem solving. So again, I don't know. Like I said, I think we've used $5 quadrillion, and I do think there's a lot more cash out there than anyone knows. Not in like a malicious way, but just families don't disclose their their money. So global domestic product is the new financing introduced into the economy. I don't think anyone has a real understanding of how much money is just out there to begin with. But like I said, I think the market capitalization of Bitcoin right now around the 55 is like 50 to 60,000 is $1 trillion. So millions of dollars of coin is what I'll put it at in 10 years, 10, 20, 25 years. But the global economy will be a section of, holdings in Bitcoin or holding in some sort of cryptocurrency. Just as I guess it doesn't have to be a huge percentage, but I don't think, saying outflows from gold going into Bitcoin or even flows from stimulus checks on the long-term matter at all. It's really a percentage of GDP and a percentage of the utility of the asset. So like I said, I think future price per share will definitely be in the millions. If an ETF sticks this cycle, I think 35 to 50,000 will be the bottom of this cycle, and we'll see. That's what I want to say about long-term, big economic ideas. Just trade updates. I'm about up 100% in 3 months. I've traded Riot pretty well. I'm sitting at about, as of today, I think I was up like $7,100. I had an initial trade from the 20 to 65-ish range for $3,000 profit, and I have a pretty decent sized position. I think it's like, I was at 15,000 a couple weeks ago. I think I trimmed it a little bit the end of last week and then re-added this week. So I think it's like a $10,000, $12,000 position, and like I said, I'm up about $7,000 on that. Carnival Cruise Line, I've added to that. That's my reopening play. MEDF, I will add these profits. Like these Riot and Bitcoin are my main focus trades for the rest of this year. I'll have big profits from Bitcoin for sure, and we'll see about Riot. So I'll reallocate some of that to MEDF. I'll probably buy another company. CCL. So that I hope to make, I don't know, 5 to 25,000 off that in the next, so that'll be medium term, till the fall time or till the winter, whenever there's a big momentum trade for the reopening. That has not happened yet. Not in any micro caps right now. So this is what I'm focusing on. I'll take a pretty sizable position on Carnival Cruise Line as well. 10, 20 grand. Same with Riot, 10, 20 grand. TD Ameritrade, just finishing up this episode with just some terminology. Like I said, the yield, bond, and interest rates for debt instruments, that's not clear to me logically with the terms. But on TD Ameritrade, they list options like 16 March 21. Stop doing this, TD Ameritrade, for fuck's sake. When in your life have you ever read, yeah dude, it's 16 March 21 today. It's March 16th, 2021. Month, day, year. That's how we speak, that's how you should write it. And genuinely, as a consumer, I get on this app or on my Thinkorswim terminal hundreds of times a day. Every single time I have to rethink what this is supposed to mean. So, super random for TD Ameritrade. That's definitely not, other brokers have it better, but please, TD Ameritrade, please fix this. Remember, people aren't stupid. Just because there's 2 numbers in a row, people aren't going to read that wrong. 16 March 21, right, when we start using different years, like if it's March 21st, 2022, then it looks like this, and I'm like, what fucking year is it? Who's going where? What's my option? Did I just buy a small child in Africa? What's going on? I don't know. So please fix that, TD Ameritrade. Those are my thoughts on fungibility. Love that word. Options, debt instruments, other stuff. Thanks for watching part 15.